Good morning. My name is Bryan Wallace. I'm a managing director at Bridgepoint Investment Banking, where I lead our industrial and business services team. Today, I am here to present our third quarter services M&A update. Despite rising inflation, stagnant GDP growth, and a volatile public equity market that has seen the Bridgepoint Services Index trade down approximately 15% over the last 6 months, interest in service models remains strong for both private equity and strategic buyers. In particular, those service models that can offer access to a large, stable, and growing end market are garnering particular attention. Most service models are experiencing the same struggles in today's market. COVID impact and staffing concerns remain present with nearly every operator we speak with on a regular basis. In particular, staffing shortages are causing operators to reassess the project nature of their business and seek out longer-term contractual revenue streams. Despite the volatile public market and recessionary pressures that seem to grow on a daily basis, we expect both private equity and strategic buyer interest to remain strong for service models over the coming years. Buyers have become very attracted to the recurring revenue stream that can often come from these service businesses and are seeking opportunities to enter service models in a variety of sectors. The graph on the top right shows that services M&A volume fell slightly in Q2 2022. We believe this decline is mostly driven by larger macroeconomic trends and global market uncertainty, but that buyer interest in these types of assets remains strong. In the bottom right, services companies continue to demonstrate a very strong growth profile with leading margin characteristics. The boxes on the left show several niche sectors where Bridgepoint expects continued demand through 2022 and into 2023. Any operators in these spaces that have the ability to enter into longer-term recurring revenue contracts will see a premium when they hit the market. We expect demand to continue for both operators servicing the industrial end market as well as the residential sector, which experienced explosive growth through 2022. In an effort to provide real-time buyer and financing insight, Bridgepoint regularly speaks with firms that are active in the services space. KLH Capital, a leading services private equity investor, believes that top operators will continue to successfully navigate a dynamic market and offer real opportunity for growth. KLH has invested in service plays across both industrial and residential end markets and is currently seeking operators poised to capitalize on projects delayed due to COVID. Prospect Capital, who provides both debt and equity capital to service companies, noted that service models are experiencing some headwinds in the form of inflation, staffing shortages, and the impact from the international energy markets. Prospect believes that those headwinds will be offset by operators that offer strong pricing power and have low customer concentration. In our conversations with private equity and private credit firms throughout the country, we believe that services interest will remain robust through 2023, and those that are able to offer access to growing and diversified end markets will see differentiated levels of interest. The chart on page 5 shows historical enterprise value to EBITDA multiples by sector and compares them to the performance of the Russell 2000 and the S&P 500 index. As you can see, the distribution services, industrial services, and business services indexes largely track the broader market, where they experienced a decline in early 2020 due to COVID, with a nice rebound in Q3 and Q4 and well into 2021. As the global economic market has become more uncertain, and we've seen rising inflation, the impact of Russia, Ukraine, and the beginning of a recessionary environment, all of these indexes have traded down in kind. Overall, the indexes have declined approximately 15% over the last 6 months, tracking the broader market. Page 6 gives a listing of some selected industrial and business services transactions that have been completed over the course of the last 90 days. We note during the last quarter that demand from both strategic and financial buyers remains robust. Buyers continue to seek out diverse end markets with significant opportunities for growth in both residential and industrial services, and a new focus on servicing mission-critical assets that have become necessary as projects were delayed due to the COVID pandemic. In summary, we expect that service models will continue to perform well through a potential recession, and we are excited about the opportunities that will be available to those that can navigate this dynamic operating environment. If you have any questions on this report, the state of the market, or are curious about what options could be available to you as a services company owner, please do not hesitate to reach out to me or any member of the services team at Bridgepoint. We focus solely on achieving great outcomes for our founder and family-owned clients. Let's discuss what Bridgepoint can do for you. Thank you for your time. I hope everyone has a great day.